Hey, hi everyone. Welcome to another video in our hedge fund series. So today we are going to discuss about Paul Tudor Jones and his fund Tudor Investment Corporation, and we are going to discuss about the education background and major milestones and challenges faced by this fund and the assets under management for this fund and the fee this particular fund charges and what are the major trades done by this fund and profits generated, the losses the fund faced. Okay, so Paul Tudor Jones is a very famous American hedge fund manager, and he's known for founding the Tudor Investment Corporation, and he is very well known for predicting certain events beforehand. Okay, and he is accurate to the dot in predicting these events. And he's a global macro hedge fund strategy he uses. And he was very famous. He became very famous after he predicted the 1987 Black Monday crash. And he shorted it and made a very huge amount of money with that particular trade. We are gonna, yeah. He basically studied in University of Virginia. He was accepted to Harvard Business School, but he did not attend because he liked trading a lot, and he used to trade and make a good decent amount of money, and he didn't want to, miss that fun of trading. And yeah, so he was accepted to Harvard Business School, but he did not attend. Okay, and yeah. So Tudor Investment Corporation is founded by Paul Tudor Jones in 1980, and it's headquartered at Stamford, Connecticut, with additional offices in New York, Palm Beach, London, Singapore, and Sydney. As of March 2024, the assets under management of $63.6 billion, dollars, and it primarily employs global macro trading, and sometimes it uses event-driven and equity and data-driven approaches also. Fee structure is it's a higher fees than the average because he's very famous for his pretty much like he can predict things, and and he's very accurate most of the time. So his fees is 2.75 percent management fees. The average industry average is 2%, and even the performance fees is 27% instead of 20%. Okay. In 2016, the firm reduced the fees for its large funds main share class to 2.25 management fees to retain investors among due to performance challenges. The major trades that he did, as I told you, he predicted that stock market crash of 1987 Black Monday, and he achieved 125.9% return after fees that year, earning a estimated 100 million. Okay, so this is also called short selling or contract trading, but yeah, the timing is like perfect. Okay, so and yeah, he uses global macros strategy to predict the things, and he's very famous because of this prediction of 1987 Black Monday crash, and he achieved 125.9% return after fees that year. He was also successful in predicting the 1990 Japanese market. He shorted the Japanese equities market during its bubble burst, and which resulted in 87.4% return. So he is like prescient, he is precise trades, and the two very accurate trades which lead to like very high return on the capital deployed. And yeah, he had an earlier setback. Jones suffered significant loss, losing 70% of his fund on a highly leveraged cotton trade. So he used to do cotton trading. He was employed by his own relatives in cotton trading, and he suffered some losses during cotton trading. This basically changed his approach to risk management. And he's a very risk averse guy, basically. And yeah, he doesn't use leverage much in his trading style. Challenges faced are 100,000 fine to settle allegations of violating the uptick rule without admitting or denying any wrongdoing. And 2016 performance decline. Faced with poor So the major challenges faced by the Tudor Investment Corporation are 800,000 fine to settle allegations of violating the uptick rule, and he neither admitted it or denied any wrongdoing. Um 2016 performance decline was there. Faced with poor returns and investor redemptions, the firm laid off 15% of its staff to reduce fees and to retain clients. His trading philosophy is he emphasizes limiting any single trade loss to 1% of total assets, and he seeks a risk to reward ratio of 5 to 1 is to 5 actually. Okay, so risk to reward ratio of 5 1 is to 5. So he is very good at taking trades which have very less you will lose, but you will gain very much. So like there will be a huge up word gain if you gain it, but if you lose, you lose a small amount. So that is what is the risk management philosophy, where the any 1% of the total assets is only risked at any point of time, and it is risked in such situations where the probability is very high and the profit potential is also very high. Okay, a risk to reward of 1 is to 5 is very high risk to reward. And he's also his trading philosophy also includes losers average losers. So you don't he doesn't average the losers, he cuts off his positions basically. And is very good at doing cutting off his positions without any emotions. He has done some philanthropy also, like he has Robin Hood Foundation, which focuses on poverty reduction in New York City. Education initiatives also he has done, like established excellence charter school, first all boys charter school in Brooklyn. Okay, so this is Paul Tudor Jones. He is an excellent trader, and he uses global macro strategy, and has been able to predict the things beforehand, like the 1987 Black Monday short the Japanese market, and it's very famous trader. Yeah, so that's what I wanted to cover today. Thanks everyone for joining the call. Have a nice day.